What's up YouTube? Welcome back to my channel. For those of you that don't know me, hi, my name is Miguel and I'm a long-term dividend investor sharing my journey here on YouTube to a $100,000 dividend investment portfolio, while also taking y'all along for the journey, while hopefully being helpful to y'all and answering y'all's questions about my journey and anything else dividend investment related. And man, I don't know about y'all, but this week my portfolio has actually been getting slammed. And there's actually a reason for that. There's a company in China that owes a lot of money. But before we do that, don't forget to subscribe to the channel if you have not already. Leave a like on the video, it helps out my channel growth so much. And then comment if you like the video or if you have any questions. Now let's roll the intro. Now as always, at the beginning of every video I go over the value of my portfolio and the buys that I did do for that week. So let's hop into that real quick. Now the market is still open. So my portfolio is sitting at $11,820.98. I am up on the day $16 or about 0.14%. On the week I'm down $169.83 or about 1.42%. On the month I'm down $431.69 or about 3.52%. And then on the 3 months I am down $143.34 or about 1.2%. And then on the year, I am up $1,224.97, or about 11.56%. And then on the all-time, it's going to be the exact same as the year because I have been investing for about a year now. Now, hopping into the buys for the week, the first purchase that I made was buying one share of MRK. I bought that one share at an average cost of $72.44. And then hopping into MRK, as we can see, I now have 14.56 shares at an average cost of $77.23. I am down overall $77. Or about 6%. And that is part of the reason why I'm buying more shares of MRK. I do believe in holding this company long term. They are extremely volatile, and I did think I just need to bring my dollar cost average down, which is exactly what I'm going to do here. I want to bring my dollar cost average down to about $75 roughly if I can, before it does go back up in value. In the meantime, I am still getting paid dividends from this company. This is a really solid company that I believe in. I do just think that I bought in too high, so I'm just going to dollar cost average in and bring down that average cost. And then the second buy that I did this week was buying $32.32 worth of Costco, and that gave me 0.7 shares at an average cost of $444.16. And then hopping into Costco, I now have 1.91 shares at an average cost of $395.40. I am still up overall $107 or about 14%. I still have an amazing return from Costco, but I'm still going to continue dollar cost average in. I do want to be at about 10 shares with Costco. I talk about Costco and Target so much because I do want to buy more shares of each company. It is just about finding the right timing because even with the market dipping right now, Costco is not dipping as much as I'd like, but I am still going to continue to buy more because I want 10 shares of Costco. So I'm sure by the time that this video comes out, all of y'all are going to know about the situation going on, but in the off chance that you did not know what happened, the Chinese real estate company Evergrande is actually in debt about $30 billion. Sorry, they're actually in debt about $30 million, but the $83 million is only the interest that they owe on their debt. And that is actually going to be about $2 billion by the time they actually pay this debt off. So actually what happened over the last decade or so was this company was consistently borrowing money and putting that money into their real estate without being able to pay it back. And now China is cracking down on their debt, so this company is forced to pay back all of this money that they don't necessarily have. Now this affects us because that company did not pay their offshore bonds, and it does not look like they are going to pay them this Thursday when they are due. Now at the end of the day, this is going to affect the market here, and it's affecting my portfolio as we've seen. In the past week or so, I'm already down like $200. In the past month, I'm down about $400, roughly like 3 to 4%. So what am I going to do about this? And the answer is the same as always. I am going to continue to dollar cost average my way into my stocks, especially these ones that I see myself holding for 25 plus years like Costco, Target, Apple, Microsoft, because again, time in the market is always going to beat trying to time the market. Now I did make a video on TikTok that did kind of blow up, and it was in regards to a potential stock market crash, and that was about 4 months ago. Now I know this is not a stock market crash by any means. This is just a little correction or dip if you will, but this is important to learn from and to grow from because as we saw when the pandemic hit, a lot of people got scared and they just started selling off of all their stocks. And then what ended up happening was beginning investors like myself were actually able to jump in at a pretty good time in the stock market. I do have some decent gains and I do owe that to jumping in at the right time, but I am a firm believer in continuing to buy and dollar cost average your way into these stocks that you do want to hold for 25 plus years. Because again, in the next couple of months or so, we're going to have mass hysteria, I believe, I do believe that this is the start of a rough couple of months ahead of us. Now, I am not going to tell you what you should do, but I'm going to tell you what I'm going to do. I believe that the next couple of months are going to be a true testament to buying into companies that you want to hold for 25 plus years. I'm talking Apple, I'm talking Microsoft, I'm talking Costco, I'm talking Target. These are companies that I'm looking at right now, and as we can see, just by hopping into Apple right now, when we go to the 5-year mark, when the pandemic hit, they were at about $81, and then they dropped all the way down to $60, so about $20 there. And they've been going up ever since. And then just going into the 1 month right now, if you were to buy into Apple right now, you'd be saving about $4 or about 3%. That is pretty crazy. It's still kind of expensive for Apple, but again, they're going nowhere but up. And realistically, timing the market is like a 1 in a million chance. So while these companies are on sale the next couple of months, and we see mass hysteria about people in the stock market telling you to sell off, this is the time when you reflect on your portfolio and what did happen over the course of the last year or so, how you could have continued to buy the dip instead of listening to other people in mass hysteria, and how you could have a lot more gains right now and a lot more dividends. Because I am a long-term dividend investor, regardless of how the market performs, because I'm invested into dividend kings and dividend aristocrats, which means they have all the incentive in the world to continue to pay that dividend regardless of how they're performing, I'm going to continue to get dividends, and even when they are down, I'm going to buy the dip, bring down my dollar cost average, so when they pass my dollar cost average, I am also going to be up, as well as getting paid dividends. For me, it's a win-win. Now, I know not everyone is as comfortable into the stock market as I am, or as other experienced dividend investors, so do whatever is comfortable for you. For me, over the course of the next couple of months, I kind of want to put in about $5,000 roughly, because again, I am building this $100,000 dividend investment portfolio to have that steady source of passive income every single year. But whatever you do, just remember that back in 2008 and even during the pandemic, the stock market recovered and then some. We're not going to play the what if games at all. I want to minimize my regrets in the stock market by continuing to just dollar cost average in, buying the dip, collecting those dividends and reinvesting those dividends, basically until I retire. That is what I'm personally going to do. Let me know what you guys are going to do over the next couple of months in the comments. I'm actually excited because ultimately I don't look at the gains. Like I said, I am in this for this dividend portfolio and to continue to get that passive income. But thank you all so much for watching. I know this video was a little bit different. It's usually a little bit more structured, but this week I did want to try something different and just talk to y'all about what I'm thinking about doing the next couple of months in my portfolio. A lot of crazy stuff is going to happen over the next couple of months, and I kind of wanted to make a video, sit down and just talk and debrief, so that way we can kind of be prepared for the next couple of months ahead. But that's okay because we are dividend investors, and we know that regardless of the stock market going up, down, left, right, we're going to get paid those sweet dividends. So subscribe to the channel if you have not already. Like I said, comment down below what your plans are for the next couple of months or how you're going to prepare for the next couple of months. Like the video, it helps out my channel so much. And I will catch y'all next week. Peace.